Hi.
Hi.
Come on in. Come on in. David, Gene.
Hi,
Listen,
Troy.
I want you to meet Troy Boone. Troy, this is Gene David Martin.
Hello.
Hi, Troy.
How do you do? Lola, I want you to meet the Martins. It's my wife, Lola.
Hi. Hello.
Hi.
Troy here runs that big service station on Sunrise Hills.
Oh, yeah.
Dave, huh?
Uh-huh.
Well, you drop by sometime, Dave. I'll give you a credit card.
Well, thanks, I will.
If you love listening to this show, please consider giving a rating and a review on Amazon Alexa or wherever you listen. We want to continue bringing you this amazing content, and part of our ability to do that means that we need a big audience. Now, it may not seem like much, but rating and reviewing the show will help more people find us, just like how you found this show. Simply on any podcast platform, search for a show, scroll down to the bottom, and push 5 stars. It's that easy. Thanks for supporting the show. So today I'm joined by Katie Rae, who is the CEO and managing partner of Engine, which is a venture capital firm that was built from MIT, and it invests in early stage companies solving some of the world's biggest problems through the convergence of breakthrough science, engineering, and leadership. Welcome to the show, Katie.
Thank you so much for having me. Happy to be here.
Thank you. Now, before running the Engine, my understanding is that you were a managing director with Techstars in Boston. And before that, or maybe in concurrent, you were also the founder of Project 11. And you've had a number of other very successful and key leadership positions in the past, Microsoft Startup Labs and many others. Can you talk a little bit about your career ascension and how you eventually became a VC?
Yeah. It's certainly not a straightforward path. I definitely didn't, know at age 9 that I wanted to be a venture capitalist. In fact, I don't even think I knew what a venture capitalist was until late into my 20s. So to me, the natural progression really was working on new companies, new ideas, working with founders or founding, and naturally coming to this point almost always of how do you match the right capital with the idea. And so, my passion has always been to help entrepreneurs. I married one. I have helped to found a whole bunch of companies and worked with now, probably thousands of companies at this point. And the natural progression was just that wanting to help people articulate their ideas, get to market, understand their customers, and match that with the right capital. And then, sometime, probably almost 20 years into my career, I was like, well, why don't I start angel investing? And why don't I, maybe I should learn to invest. And my friend Brad Feld really took me under his wing and said, you know what, I'll teach you how to invest. Why don't you come and run Techstars Boston, and, I'll be your first LP. And it just kind of went from there. So, and now I've backed, over 125 companies, and some very successful, and of course others not, as venture goes. And now here I am at the Engine.
Yeah, I think what I really appreciate about your story, your narrative, is this kind of organic evolution, and every kind of stepping stone eventually led to what you're doing today. But there was clearly that pattern and pattern recognition, and then really allowing for kind of that fluidity, the market to kind of shape and pull and tug. And I think it's fascinating that the market saw you in that capacity. Now, I want to talk a little bit about something that's kind of more recent in terms of the Engine. I know that Israel Ruiz, former EVP and treasurer of MIT, recently announced that he's stepping down from his position as the founding chairman of the Engine. Guess he's going to be launching his own fund. Now, I know he was very instrumental back in 2016 in terms of really feeling like there was this unmet need for patient capital and access to specialized infrastructure and expertise that were really focusing on big problems like climate change and human health and advanced computing, and specifically recruited you to run the engine. So I'm curious as to, what was the thought process, and when you were approached, what was your response to his requests?
When I first met Israel and all the folks at MIT, not just Israel, I taught there as an adjunct for a number of years and worked with many, many startups out of MIT, right, in this ecosystem for, over a decade. And when I was first approached, I thought, this is crazy. This is not the role of the university. Why are they doing this? And then my urge was really to just try to make their idea better, because once I sat and spent time with Israel, you realize what an extraordinary individual he was, both as a thinker and a leader. And it just kind of went from there. We just started really talking about how to make this thing successful and what it would take. And then he kept saying, well, okay, if that's what it takes, great, let's go get that done. And it just kind of organically evolved to the point where I was like, wow, this is an extraordinary thing MIT wants to do. And I'd be insane not to be involved. So, you'll see that pattern in my life is like, I kind of go with things intuitively. And, I think Israel really convinced me that MIT was serious about trying to change how entrepreneurs who were in what we call tough tech were being funded, but also supported by an incredible place like MIT, right? Think of the assets MIT has in terms of network, infrastructure, connectivity, alumni base. And if you could take some of that and apply it to quicken the pace of these types of startups, or give them resources they wouldn't normally have to give them an advantage, like how incredible would that be? And so that's what got me to yes. Just by the way, Israel's not leaving to start a fund, he's leaving to start a company. And so I'm sure you'll hear more from him. He has so many extraordinary things ahead of him. And I've had the privilege of working very, very closely with him. And he's been a close friend, mentor, and colleague. So
that's fantastic. Now, I've personally have, spoken and visited many universities around the world, and many universities aspire to have something like an engine, whether it's wholly homegrown and managed, or maybe slightly off to the side in some hybrid fashion. So I'm curious to know, what was the initial kind of thesis around it, and how has that evolved in terms of, what the engine is, and how is the relationship with MIT changed, or maybe not have changed since then?
Yeah. So really the relationship hasn't changed. We have a very good relationship. So, but the way it works is we were spun out as a for-profit from MIT. And that is really important because, MIT is a nonprofit. They have an educational mission. The engine has a for-profit mission, but we're also a public benefit corporation. So we want to both return capital as a venture capital firm, but also our mission as a public benefit corporation is to help establish and grow these incredibly impactful companies tackling the world's toughest problems with technology, right? And long-term sustainable kind of breakthrough technology. So that mission of impact is 100% aligned to MIT's mission of impact. So that is the reason we can coexist beautifully, even with quite different business models. And so, when we started, that was one of the fundamental pieces, is there alignment in each of our missions? And do we amplify each other? And I think the answer to that is yes. But that's not true of every university, right? And MIT has a incredibly principled way of looking at this. And that's why it's worked. And we have a board of directors, 2 of which are from MIT, wonderful people. And Israel was our founding chair, along with Anantha, who's the Dean of Engineering. And, that will evolve over time on who serves on our board. But we are involved at every level at MIT. And, things around policy or things around, how to encourage entrepreneurship. Like, we love to be there side by side with the different pieces of MIT so that we can amplify each other. And that hasn't changed, I think, because it was set up very, very elegantly from the beginning.
That's a beautiful model. And I think, one of the dangers of trying to clone or replicate such a model elsewhere is that, the local ecosystem or the assets that we talked about isn't necessarily readily available at another university at the same level or type like MIT. So I think there's a lot of kind of uniqueness to the MIT community. Just more out of curiosity, I know the originating fund was about $205 million. Out of that, was there a portion that came directly from MIT as part of an LP structure?
Yes. And we've said this publicly. They, in Fund 1, invested $25 million into the fund. So they were an anchor, an important anchor, but only, roughly 10% of the fund, which is exactly what we wanted. We wanted a lot of incredible LPs around this. And by the way, just one thing is that one other piece that MIT did, which I think is very unusual, is that the fund is not captive to MIT. So we invest into startups coming out of MIT, of course, and many of them do because of the incredible work and entrepreneurship that happens there, but also work very closely with other universities, specifically in the Boston region.
That's great to know. Well, let's get right into the heart of it. I know you guys focus on tough tech, and I wonder how you guys define that and how that differs from nomenclature of, let's say, deep tech.
Yeah, I think the way we think about it is that we want not just that frontier technology, but we want things that will build lasting companies and have lasting impact. And so that toughness is not only that sometimes they're hard to do in the beginning because they involve real tech, but that they last. And so we love the double meaning of that. And that they last in the form of creating industries that better the planet or better life that we live, whether it's our health or how we communicate, how things get moved, or reversal of climate change, all those things. So these really big issues, but that they will have these companies will have a lasting impact. And so that's how we think of it. And we think those kind of companies don't get established without, true technology breakthrough, without, real leadership, right? And that love of what science and engineering can do to better the world. And so it's those things combined. So when we back startups, we are backing the human beings that run this, right? It's not just about the technology. It's also about how they are going to lead in order to grow a really big, important company that will make changes over a long period of time.
So I can tell that from the genesis, to the founding charter, to the mission statement and the principles and alignment between, MIT and the other LPs, it's clear that you guys are distinctively different because, we've had other VCs on the show before. They don't talk like you. They don't behave like you. Their time horizon certainly isn't at least the way you describe it. So I'm curious, as you look to sustainability, reducing waste, advancing public health, and preventive medicine, some of these things are fairly long-term, maybe even exceeds kind of the normal duration of a fund. How do you operate in that kind of patient capital?
Yeah, so I think, well, first of all, not everything we do will take longer than 10 years, but some will. And the fact that we constrain ourselves based on the norms of venture capital mean we leave some of these enormous companies by the wayside. And, we think that isn't the right way to think about it. So when we put an LP base together, we put together a group of people that had that longer term orientation. And that meant that, we could bet on things like fusion. So like something like Commonwealth Fusion, normally that could not fit inside a, 8 to 10 year time horizon. And so you needed the 12, 15 year time horizon in order to be able to know that you could get probably to the public markets before then. And so, it is longer. It's not 3x longer, but it's definitely longer. And that opens up so many incredible opportunities where you could create $1 trillion companies, right? And all your LPs will be super psyched about that. If those come to bear, right? And so we just decided, let's try a very different orientation and see if we can pull people around us that are like-minded. And so for most of our LPs, we're a very highly differentiated bet in their portfolio of either venture capital or other types of funds.
Yeah, it's interesting because, I think, as a VC, if you're getting 2x, 10x, that's outstanding, right? But here, potentially, because we're talking about transformative things like fusion, quantum computing, climate change mitigation, adaptation technologies. We haven't even talked about things outside of this terrestrial aspect. These could become entire new ecosystems that, to your point, becomes fairly sizable. So I do want to go back to your portfolio size, which is fairly large, which is an indication of, diversification, mitigating business-specific risk, and this notion of having a large kind of a portfolio to be able to have a bet that's going to hopefully play out in the long run.
Yes. We, typically our funds will be 25 to 30 portfolio companies. And we like that kind of diversification. Certainly there are portfolios that are much larger than that. But I think for the size of our fund, that's about the right set of diversification. That model, I think, plays out well. There are ways to continue to support the companies in either SPVs or endurance funds, so that if we have some outlier winners, our LPs can also benefit from that. But that was kind of how we constructed the portfolio. So that in and of itself is very much like most venture capital funds, right? That you probably need above 20 bets. There are very few with less than that. And I think the same plays out here. And we also wanted a very broad group of industries that we are going after to either transform or start, so that you had a lot of diversification there. So you'll see that in our portfolio too.
Well, I'm going to come back to specific portfolios, companies that you're very excited about. But I want to focus on one area that you've mentioned in media before, which is around diversity and inclusion within the VC industries. And I think you quoted things like, only 1% of VC dollars go to Black founders, 2.7% goes to women founders. And then, of course, African-American women founders get a very, very small fraction, and then Latinx, it's negligible. What are your thoughts about that? And do you feel like there is a shift in culture and outcomes?
It's interesting. I definitely feel a shift, but the numbers certainly don't bear it out this last quarter. I don't know if you just read PitchBook. I think it was this morning or yesterday morning. Actually, funding of female founders in general is down this quarter. So we're talking about it. That's good. There's maybe some acknowledgement that, we are not funding in as diverse ways that we should be or could be. And we're probably all missing opportunities because of that as an industry. But the data's not bearing it out yet. And I'm hopeful that it will. And I certainly think over the next 10 years, there will be a really big shift. But, if you look at who controls capital today and look at who gets capital, it's almost 1 for 1. And so there are very few women who run, funds. There are very few African Americans who run funds, whether male or female. That all of these kind of underrepresented groups are still in the real minority. and it's the responsibility of everyone, the GPs to back people, the LPs to hold themselves to account about who they back. It's a really important topic, because without us acknowledging that, what we're doing as a society is telling these young, incredible people who are going to found companies that, oh, if you don't look like this, you don't deserve capital. And you're just leaving a lot of people on the side. And that's just silly. And so I think we have to change our orientation there to really be looking for opportunities and betting on people. I mean, that's what we do as venture capitalists, right? And so we're looking for the diamond in the rough. We're looking for the people that others aren't going to bet on, because that's where our returns are going to come from. So that's just my orientation toward it.
Beautiful. Thank you for that. I know we only have a couple of minutes, but can you share one or two companies, whether it's within climate change, human health, or advanced computing, that you're just really excited about, and why?
Yeah, I mean, well, first of all, Thursday afternoons as a team, we spend together kind of in case method, talking about different portfolio companies and batting around how we should help them or what advice we should give to them. So I am so lucky that I work with so many teams that I find incredible in what they're doing. But maybe I'll just mention a couple that come to the top of my mind today. So, there are things like BioBot. Now, they're putting robots in sewers, right, to test wastewater. And that in and of itself is not a revolutionary idea. But when you think about, given today, how broadly we could do this and really understand human health at a very distinct point, so that we could track outbreaks of COVID and know far in advance of the doctors that there's going to be an outbreak, or we could understand opioids. If you think about how that could shift society, and that's the convergence of robotics and software and, testing, right? Diagnostics. That is something that we think is incredibly compelling. And, and COVID is just accelerating that, because everybody knows now that without it, we're left to wait for these outbreaks and not really understand how to shift resources as a society. And so that's a really fun one. And can go pretty quickly. So that's an example of one that doesn't need 18 years, but is tough tech. Okay, then I'll take you opposite spectrum. Commonwealth Fusion, right? They had a whole bunch of press last week, released all of their science. We think they will be the first net positive fusion power plant in the world. And that is transformational to the grid, transformational to who gets power at what price and at what availability. And these are incredibly safe power plants that could transform different societies and also, decarbonize our entire grid. Like, how awesome is that? We know we have to have things like this in order to ever hit the Paris Climate Accord. We have to have big changes like this. And so it's just an incredibly exciting company.
Well, so exciting, really exciting indeed, whether it's predictive that gets at the bigger picture, the macro perspective of society, immunology, infectious diseases, to the potential of unlimited power and what it's going to do to a downward pressure on costs and availability of that energy to the people who didn't have it as easily accessible. Any last word before we wrap up today?
I would just say, despite how, kind of tumultuous these times are in the US and in the world, really, I am incredibly hopeful for the future. I get to work with young people coming out of their PhD programs or, undergrad with big, big ideas and big mission, and the desire to change how the world behaves today or who has access. And I think we should all be incredibly hopeful about the future we have because of the people and the orientation to making the planet better for everyone, our society better for everyone. And I think we're going to grow some enormous companies out of that.
And I think that is a perfect message that we wanted to end on a note. So today I've been joined by Katie Rae, who is the CEO and managing partner of the Engine. Thanks for joining today.
Thanks.
If you've enjoyed this episode, take a moment to rate our show on any podcast platform that you listen to. Scroll down to the bottom and push 5 stars. It's that easy. And as always, thanks for listening.